You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome. Today we're looking at some really significant shifts happening in the world of digital assets. We've seen things moving fast across regulation, finance, even social media. Our aim here is to, cut through some of the noise and give you a clearer view, maybe even a few aha moments. Let's kick off with the SEC. They've got this thing called Project Crypto. And it sounds like more than just minor adjustments. It's a directive, right? To overhaul some pretty old securities rules specifically for on-chain trading.
Exactly. Trading directly on the blockchain.
Yeah.
And the bigger picture here seems to be positioning the U.S.
as the crypto capital.
That seems to be the goal, yeah, to keep innovation and the capital that follows it from heading offshore. It's a strategic play.
Okay, strategic makes sense. But is it just talk, or is this actually happening? Are big players moving?
Oh, it's definitely happening. This isn't just theory. Look at Visa.
Visa, really?
Yeah, they're actively integrating stablecoins, the ones pegged to currencies like the euro or the dollar. They're now supporting multi-chain settlement. We're talking 4 different blockchains. Stellar, Avalanche are in there, and several stablecoins like EURC, USDG, PYUSD.
Wow, okay, so that means...
It means global settlement for over 25 fiat currencies. They're basically building tokenized money movement into the traditional finance plumbing. It's a pretty direct challenge to the old correspondent banking ways.
So, okay, let me get this straight. These huge traditional finance companies aren't just watching anymore. They're actually building with blockchain tech.
Precisely. They're embedding it.
That's quite a shift. But while that foundation is being laid, what about innovation on the, let's say, consumer side? I heard Coinbase is doing something interesting.
Yeah. Coinbase is launching what they're calling an everything exchange in the U.S.
An everything exchange.
The idea is on-chain trading of tokenized real-world assets. So think stocks, derivatives, even prediction markets, all tradable on the blockchain.
Which puts them head-to-head with platforms like Robinhood, presumably?
Directly, yeah. But the vision behind it is, well, it's pretty ambitious.
Yeah.
It's about creating a more global, accessible economy by putting potentially all assets on-chain.
All assets, okay.
And this idea, this tokenization, it's even spilling into social media. Have you seen what Zora's doing?
Zora, tell me more.
Well, they've basically transformed into an on-chain social app. Your posts, even your profile, they're tradable ERC20 tokens.
Wait, seriously, my social media posts could be assets.
That's the model.
Sure.
Creators can generate revenue directly. And they're using things like privy wallets to make it easier for people to get started, simplifying the whole crypto wallet setup. It really blurs the lines, doesn't it, between just using social media and engaging with financial protocols.
It absolutely does. Content as a tradable asset.
Yeah.
It's wild. Really makes you think about the implications. Okay, so I've got TradFi integrating blockchain. We have innovation blurring social and finance. What about completely new financial structures popping up? I read about these DATCOs, digital asset treasury companies.
Yes, TACOs. They're significant players now, holding over, I think it's $100 billion in crypto combined. Lots of Bitcoin and Ether.
$100 billion? How do they operate?
Well, they use this model, sometimes called accretive dilution. Essentially, they raise capital, often at a premium, specifically to buy more digital assets like Bitcoin or Ether.
Okay. Sounds clever, maybe.
It can be, but there's a historical parallel that's a bit worrying. It kind of echoes those investment trusts back in the 1920s.
Oh, right before the crash.
Exactly. Those relied heavily on rising stock prices and premiums to keep going. So it's a model that works until it doesn't. Bit of a warning sign there about relying solely on, ever-increasing asset prices.
Gotcha. A historical caution. But at the same time, is DeFi itself getting more, stable? More mature?
I say so. Look at Aave, for example. Massive platform, right? Around $58 billion in deposits. It's starting to function almost like a benchmark rate for DeFi.
Like SOFR in traditional finance.
Kind of, yeah. It's becoming that reference point, which definitely signals a certain level of maturity and institutional comfort creeping into the DeFi space.
So it's this interesting mix then. You've got these bold, potentially risky new models like the DATCOs, but also the foundations of DeFi starting to look more solid, more institutional.
That's a good way to put it. Innovation and institutionalization happening side by side and very quickly.
So wrapping things up a bit, we've touched on regulation, pushing things forward, traditional finance jumping in, social platforms becoming financialized. It's all converging pretty fast.
It really is. And if you step back and connect these dots, it points towards a future where potentially almost anything could be tokenized. Tangible things, intangible things, all tradable.
Which leaves us with a pretty big question, doesn't it?
How does our basic understanding of ownership, of value itself, change when everything from company stock to, well, a social media post could become an asset?
It's a compelling thought indeed. Something for you to ponder. Until our next exploration.
Spoken Tech for your ears.